Alrighty, good morning, everybody. It's Wednesday, May 4th, 2022. May the 4th be with you. Ha, ha, ha. Let's get started here. We've got FOMC today, 11 a.m. Pacific, 2 p.m. Eastern will be when we have the FOMC announcement. We've got, some Fed speak going on all morning. That might be why the last 2 days have been just so lackluster. So just be aware we could be in for another snooze fest here this morning. Um, but with that being said, let's just go ahead and take a look what we're dealing with this morning. I'm not even going to go back and review yesterday because it was just kind of a up and down chop fest for our morning trading session. And then even once we broke out to the upside, it became a sideways chop fest for the rest of the morning. Just a slightly larger range to that, so very balanced market for the last few days. And that's where we find ourselves this morning, still within basically all of the trading action from yesterday, which was, again, a very balanced sideways choppy situation. And right now, it's kind of interesting to note we came down. We just came down and bounced off of the orange power level. But as we bounce out of there, we found resistance. We're finding resistance right at the back end of VWAP and just about the fast moving average here. So what we need to see here, if the orange power level is going to work out like it typically does, we'd like to see the market come up and get through those two moving averages and get through 8250 here for the expectation of a larger push. Anyway, let's go ahead and jump up and do our pre-market analysis here and see what we can work with coming into the open. Go up to the daily here, and you can see, like we said the other day, yesterday, we have a really nice doji on the daily from Monday, and a little bit of follow through on Tuesday. We did get to higher highs, and now here we are on Wednesday, stuck within yesterday's range. And like I said, we just bounced off the orange power level. So if that's going to be the holy level this morning, we could expect an attempt to come test the high of yesterday and push up into some of the other levels. Not much else to really mention here on the daily chart. There is a bullish divergence off of that low from Monday. However, like I've been saying all week, every time we get some type of bullish follow through, it's typically just for these little bounces, and then the bears come in and they swat it right back down. And sometimes you get a nice protracted push, maybe giving the bulls a little bit of hope, and then bam, swat it back down. And typically it's right around a major swing and probably a retracement level right there as well, right? So really great stuff, yep, right to 50%. So this is the kind of stuff that we're dealing with right now. So with this push out right now, it's not going to be surprising to see some type of failure and an attempt to push lower, just based off what's been happening for the last few weeks here. There's also really nothing very enticing going on globally or nationally right now that would, give us a fundamental clue that we can expect some type of major rally to push back up to the all-time highs. So let's go into our levels here. We did get through the 50% retracement of the leg we talked about yesterday and got this little peak up and basically failed. The high of yesterday was just in front of the major structure zone there. And if you look back to that major swing back here where we came down, bounced out right there, that major swing is exactly what the high was from yesterday there, within a tick or two or a point or two there. So got some failure from there, but that doesn't mean that this bullish rally or micro rally is over, right? We could very well continue to go ahead, push through the major structure zone there right around 4,200 and come up into the 61.8 retracement you see here at 4,209 and go ahead and continue going past that. So let's go ahead and we'll go to our 60-minute chart and look at all the discrete levels we want to pay attention to. From the 4-hour perspective here, don't think there's really much else to add to the picture outside of the fact that technically the high from yesterday was had a bearish divergence on it, and then we got another bearish divergence in the overnight session here off of these highs. Really, it's kind of a weird little formation or pattern, but basically each of these highs here has some bearish clues in relation to the high of yesterday. So until we can get through the high of yesterday, we do have a whole bunch of 4-hour time frame bearish signals. And the daily, we're not quite seeing anything there. Let me just take a look at the 60-minute just to iron this out. Yep, so 60-minute bearish signal from yesterday's high. And then in the overnight session, we got bearish off the high right after the Globex session opened. And then technically we still do have some bearish signals here off of the overnight high as well. So the 4-hour and the hourly showing some pretty clean bearish divergences. What does that mean? That means if we can't get through the overnight high or the high of yesterday, or if we get some type of a test of it or peek through and the market starts to fail from there, that gives us a clue that we can expect, again, a nice swat by the bears to push the market back down. However, if the market does push and get through yesterday's high and, for the most part hold above it, then we could look for and expect the push up into some of these levels you see I have marked on the chart. So what I'd like to do is just talk about all these levels we're dealing with here this morning. At the most immediate area of basically the current market price right now, CMP, is sitting right here at the orange power level, our holy orange power level, that's what I'm calling it now, and the close from yesterday, the Globex close from yesterday. So that's the little pocket we're in right now. If the price cannot hold above that, the bulls can't hold that, we would expect there to be potentially some type of reaction here right around 50% of the previous day. And if you look back to 2 days ago, the high of 2 days ago there, 41.6575, we have 41.6250 here. So basically 62 to 65, 62.50 to 65.50 is one little pocket right here that I think is a decent possibility. So let me just go ahead and get this on the chart. 62.50, 65.50. Get it on all our charts so that when we pull back, we're aware that the top end of that shaded region is that major swing high, the high from Monday, right? So high of Monday and 50% of yesterday lining up right there in that little pocket. So want to be aware of that. Throw it on the charts. If bulls do not hold where we are right now or hold from 50% of yesterday, then it opens us right into the 38% retracement of the whole leg up from Monday's low to Tuesday's high. And so their 38 retracement is exactly our major eye level. If that breaks, we've got a pocket here, the low of yesterday, 41.29, right into the 50% retracement at 41.26. So 26 to 29 would be that next potential pocket of support. And if that doesn't hold, then we always could potentially hold that 61.8 retrace right there where we have our minor eye level at 41.0850. So basically 41.0850 to 41.0950 there would be the next pocket of potential support. And then we get down into that 40.93 level, and I could have sworn I put a little pocket in right there. Let me look at my shorter time frames. It might have just been on the shorter time frames. Yeah, so maybe it's just too small to see. So we have a little pocket here, 40.93 to 40.94. And let me just make sure this is on all the charts. Okay. It's just such a small, thin range that you can't really see it on the 60-minute chart here, but 40.93 to 94 is just that little pocket that we were watching a couple days ago, and we did come up and come right into 94 and fell from there before we eventually chugged on out from that area. So that little pocket, 93 to 94, I think is a very relevant level that could be potential support once again if we get down to there. And once that breaks, we've got 40.80 and then the low of the week down here at 40.55. Actually the low, 40.56. So those are the levels down below us here that would, in my opinion, be the strongest potential levels of support if there's going to be any kind of support. Remember, if the market gets heavy, like it does in many instances for the last few weeks here, we could just start ripping right through all these levels. They don't have to hold. These are just the most, in my opinion, the most probable levels that we could expect to see hold if we do get down there and there is an interaction. Any further from the weekly low at 40.56, it's the same stuff we talked about back on Monday, and potentially even yesterday. We had 40.42, 40.23, the 4,000 major eye level that I have specifically there at 4,004, and then remember it's a little bit of a pocket right there, and then it's right down another 50 points to 39.50, and our major eye level at 39.45. Now this level here is, again, it's got 5 points to the upside, 5 points to the downside. So we're looking at that whole pocket there, 39.50, 39.45, and 39.40. If that can't hold, we've got our next major level pretty close. This is a pretty tight, two major levels very close together there at 39.14. And then if that breaks, it's a pretty open gap all the way back to 38.50, 38.45, and our major level at 38.22. So that's what we got below us. Now, if the bulls start to rip higher, and like I said earlier, we need to get through the previous daily high and the overnight high and actually get through and appreciably get above it before we have any faith in any type of breakout here. And even if even if the bulls go ahead and start to rip, I'm pretty skeptical of getting a major breakout. I'd still be expecting these pockets that we're going to talk about right now to be resistance. So let's take a look here. Just above the previous daily high is our major eye level. So yesterday we came up, we got outside of all the chop for a little bit and pushed just in front of that major eye level there at 4,200 and got this pullback. In fact, it was a pretty strong 41.95 to 41, say, let's just argue 41.45 for just about a 50-point pullback there. So pretty nice pullback from the major area. And now you can see where the bulls are kind of trying to hold it and push right now. But if you just look to the last month or two of price action, every time the bulls try to push, it doesn't end up working out, right? So let's look at these levels here. 4,200 is the major level. And then from there, we've got the retracement down. Remember the high back here, the high of last week, all the way down to the low we just made here on Monday, gives us some retracement levels. 50% has already been dealt with, right? Didn't really work out. I might have held to the tick on a few tests here from yesterday. I don't remember. But we've got the 61.8 sitting right there at 42.09. So once 4,200 breaks, we're pushing right into the 61.8 retracement of the sell-off into our minor eye level at 13. So that pocket 09 to 13 looks like a good potential resistance spot. And then if the bulls continue to push through the first area, so once 13 breaks, we've got a nice open chunk right here for a beautiful long trade up into this major swing back here at 42.35.50. Just make sure that's right, 42.35.50. And then just a little bit further from there, and it is a little bit messy up in that area. Just a little bit further, we have 42.40 to 42.44. That little 4-point pocket right there, if that swing low doesn't hold. And then from there, if they continue to chug through, we've got 56.50 to 62 for just about a 5-point range right there. If that breaks, it's a pretty straight shot from 42.62, another 22 points up to 42.84. And then again, the highs from last week up here right around our minor eye level at 43.06. Any further from there, we've got a major swing low here at 43.20 quarter and our major eye level at 24.50. So another pocket there. I don't think we need to talk about much more, but the next major level I'm really watching is that swing low at 56. So if 24 breaks, we've got another 30-point chug up to 55, with the caveat that 48 is in the way, and this pocket between 55 to 61 also looks pretty ripe to me. So that's what we have this morning. We've got these potential resistance spots above us. Again, I don't really think there's anything that is giving the market strength to break out to the upside, but remember, anything's possible. And even though we might have some really good arguments for one way or the other, you never know if the market's going to break the complete opposite direction. So that's what we're dealing with this morning. Again, the highs of the overnight and the highs of yesterday, if they break, we're breaking a nice multiple time frame bearish signal. So you should understand the implications of that. And if we can't get through, should understand the implication of that and expected pullback into some of these potential supports. So have a great morning. We'll be back tomorrow. We're going to jump down to our short time frames and get to our members section and see what kind of trades we can get this morning. Take care.